Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, just like we said yesterday, things were not as bad as it had seemed. We had a big old bounce today. Yields finally relented, dollar relented, and stocks went boom. So what does that mean going forward? Well, you're going to want to see what we have for you today. It's going to tell you a lot about what to expect over the coming weeks and months. Let's dive in.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
Okay, Bob, so we got our little relief rally. We'll probably see some follow through, although we may consolidate a little what we saw today. But I know you've got charts that you found I thought were pretty telling. And I think with all of the hoopla with the bond market blowing up and this and that, this information here, I think that you're going to present to us is going to put all that hysteria to rest.
Yeah, I mean, first, let's do a quick replay here. Yesterday, the dollar broke first during regular trading hours. And then really interesting for you guys, just kind of note to yourself, the Asian markets are usually really, really calm and boring. And when they get active, it's usually around a reversal. And so last night we had basically, I think as soon as China opened, we had a huge dump, and it dumped all the way into the end of Asia. And then as soon as Europe came, it was Katie bar the door, a big old rip. And then when our markets opened, the bond market broke and the oil market broke. And this is what we expect. So one thing that's been happening in this market, Phil, as you know, is that oil and bonds seem to have been in this inverse relationship since like June. So it seems like they're hiding out in the oil market as they were selling the bond market. That fever broke. And I want to show you guys a chart that this should blow you away. If you know anything about correlations, you should be buying the 10 and 20-year bonds like they're going out of style. This is the ratio between the earnings yield of the stock market. It's basically the inverse of the PE ratio against the yield of the 10-year. And it's flat. It's never flat, Phil. And this is like ringing a dinner bell to a bunch of hungry football players after practice. People are going to be flying back into the bond market to take advantage of a really nice capital gains move. Now, I'm not saying it's all over and this is it. All I'm saying is that it thinks set itself up for like, you got to be an idiot to keep shorting it kind of a market. And there are a lot of idiots out there. I'm going to show you the next chart. It's amazingly mind-boggling to me. And so let's go to the next chart. This is the speculative positioning of people in the bond market. Look at the short level of shorting. It dwarfs any other time in history, Phil.
Yep.
Any other time in history. People just went like on a drunken binge and have been selling the bond market like it's going out of style. Now, part of it is they don't have a choice, because I think some of these 60-40 funds blew up. And what I mean by a 60-40 fund, these are funds that are kind of passively managed. They keep 60% of their money in, let's say, equity. Let's call it, it's an SPX. And then they keep 40% in bonds. A lot of times they're in bond funds. And then they just maintain that ratio. I think a lot of times they true up every quarter, some true up every month. Well, that ratio got blown away. And a lot of guys were dumping. And you got margin calls, you got the whole 9 yards, Phil. And then we ended up with this situation where like, oh my gosh. And you and I have been talking about this. We were looking for that double bottom in TLT. And we broke below it yesterday, got down to 85, 84, I think, and change. And we bought. So we put a buy order in at 85.20 on TLT. I personally, in my long-term account, I've been owning it and selling calls against it, and because I needed that hedge. And I think now we'll probably get maybe a 5-10% relief rally in TLT on this. It'll relieve some of this pressure, Phil.
Right.
And then I think after the next Fed meeting, when people realize that there's no way this guy can go any higher without absolutely blowing up the entire economy, then
Right.
I think we're going to see a bigger move.
Yeah, no, I agree. And what I'll add to this, I think you've covered it quite well. Watch 4.75% on the US 10-year. I think as long as we're below that, it's going to be bullish and we'll have tailwinds for stocks. Just as a reminder, yesterday we showed you guys these trades that came in on the bond ETFs. And, I think what they do is they get better returns on some of these lesser known ETFs. These aren't the rock stars, right? Everyone talks about TLT. And so instead of showing their hand, remember, institutional guys use a lot of size and they like to get in, and they're going to use dark pools, which is what those orange colors represent. Those are dark pool trades. You don't see them on the exchanges that everybody sees. They're positioning, all these funds are going to move together, but so they're actually positioning elsewhere in the market. And that's the sleight of hand that goes on with institutions. That's why we were showing you guys yesterday, hey, these guys are coming in different bond funds. And of course, TLT is going to make the move too. But so you might not always see, say, a positioning going on in TLT. TLT is sympathetic to what they do in other parts of the bond market. And TLT in and of itself, I'll say this, there's a lot of volume that's coming in on TLT on this down move. TLT is not that big of a market relative to the entire bond market. Okay, that 20-year ETF is just a small snapshot of what's going on. So don't get too enthralled about stuff that you see or don't see on TLT. We got to look at the broad bond picture. And that's what we tried to show you guys yesterday. All these different funds were getting orders coming in, and you have to take a little more sophisticated approach to identify when that institutional flows come in. But it's the kind of stuff we want to share with you guys and keep you guys coming back to the channel, give you guys that alpha, that that it bounces are coming, we're oversold and things like that. So,
hey, Phil, I want to just add, if I can real quick too, is, kind of where do we go from here kind of a thing. I think you're starting to see the people that kind of are seeing the world the same as we're seeing, if they fall into two camps. So the one camp is like the Ed Yardeni camp saying, hey, there's maybe potential push down to 4,200 and then we rocket the 4,600 into the end of the year. I think we're closer to that camp. And there's some people saying we're just going to rock and roll right from here without any pushback. So, my personal view is we're going to let the market tell us, but just to give you our opinion is that we think there's probably a move to, I think you have a different number, but like maybe the 4,450 area, a little less. And then I think we should make a new low because earnings are going to start coming out and they're going to be awful. And people are going to probably guide down a little bit. Mm-hmm. And then from there, then I think then we rocket into the Christmas rally. And basically we should rise into the new year. And then from there, we just kind of see where we go. But I'd like to get your thoughts on that too, Phil. And that's kind of how I'm thinking about it. I'm not going to get too ahead of myself on opportunities yet.
Yeah, I mean, we have that gap, right? I think a good shot of filling on SPX at 4,400. So I think, that's probably the obvious target. But, these markets don't just do the obvious thing. They'll go like above it, So I think if we get into that gap, we'll probably overshoot that a little bit. The 50-day moving average on the SPX is 44.36. Those are probably the areas. And I know it seems kind of far away from here, but guys, that's why I brought up this breadth chart again. I mean, look at the levels we were at. And this didn't have the update that came in yesterday where these levels like on the left, or I'm sorry, on the right there actually triggered past that green line, which doesn't happen very often. So, and then we got the subsequent pop today. So we should see follow through. Like I said, might be some chop in here in the next 24 hours. But like you were mentioning, Bobby, you thought Friday might end on a crescendo. I tend to agree with that. I think it's key that we get over, this 45, what do we end the day? 42.63. So we basically want to start cracking over 43.80 on the S&P 500. And we start doing that. And I think you're going to see a lot more shorts unwind. And we're going to get into, remember August low, 43.35 SPX. That's probably our first upside, like real resistance. We get above that, then we'll get that higher target we talked about up there near 4,400.
Phil, before I let you go, just blew me away. I put it on in the VIP room. There's three segments, three sectors that have no stocks above their 50-day moving average.
Yeah.
It's consumer discretionary, real estate, and utilities.
Yep.
That's how extreme these moves have been and how they've totally wrecked some of these sectors have become. So, so we just knew at some point there's going to be a raising of the white flag here and we're going to get some sort of snapback rally. And I agree with you. I think that's a good play. I like to see a swing low before I add to my size here. And Thursdays typically are bearish, but we kind of jumped the gun today. We've seen this before. Remember, Phil, where you wait till Thursday for the lift into the weekend on a red week, and then they run it up on a Wednesday. Everybody gets bulled up, and they pull it back on Thursday to shake out the weak hands.
Right.
And then Friday, the news event with the employment report could be the catalyst for a 2 or 3 day rally in the next week. And that's kind of my thinking, and I'm cautious until we put a swing low in.
Yeah, and like you can see on the chart here, the head and shoulder pattern, right? A lot of times we're going to retrace back into that. Doesn't mean that the move's over. I don't think it's over, but you go up, you close that gap. People think, oh, here comes the bulls again. And really, like we've been telling you guys, I think you got to be more prepared for a lower high. So we've had one high, we've had a second lower high on that right shoulder. Now we're going to be looking for potentially another lower high as we back test up into that area. And I think we're going to get a pretty stern rejection out of that. I'm not bullish at all after the middle of the month. That ominous solar eclipse will probably time well with that, and we'll see what we get from there. But for the moment, I think the bears are on their heels here.
I agree, and that's all I have, Phil. Do you want to take us out?
All right, guys, thanks for watching. Please hit like and subscribe, smash that notification bell, and set it to all if you can. Also, check out our specials and newsletters over at tradegenius.co and get in the room with us. We're here every day navigating the markets. You get feedback from multiple people, including Bob and myself. Love to see you in the rooms, guys. Take care. We'll see you on the next video. Bye-bye.
Trade